Good morning. This is Larry McMillan with a stock market update on Monday, January 31st, before the market opens. So last week was a pretty interesting week, very volatile. Market traded down. Then Friday afternoon, a huge short covering rally actually pushed most of the indices to a tiny gain for the week, which doesn't really mean anything. But the overall picture is still unsettled. We certainly had massive oversold conditions, and those still exist despite that rally on Friday. They have not, for the most part, turned into buy signals, though. So let's start with S&P. The probes down towards the 4,200 to 4,300 area were contained last week, so that is support. And on the upside, there's some minor resistance around 4,500, but I would expect an oversold rally should be able to carry all the way to the 20-day moving average, which is up closer to 4,600. But it would still be a negative picture even if that takes place because that will, erase the oversold condition, but doesn't change the trend of S&P, which is now downward since we've made lower lows and lower highs. We are getting close to a standard or classic Bollinger Band buy signal, the way we define it. A close above 44.27 today would create that buy signal. The complete McMillan volatility band buy signal requires confirmation, though, in that we would have to close higher than today's high in order to confirm that. But still, that's certainly in play in the near term, so that's a positive indicator right there. Sometimes it takes a while for those to mature, but the last couple, both buy and sell, have been good signals in that regard. Moving on to the other indicators, the more market internals, they are very oversold and not coming out of it yet. Put call ratios continue to race to the skies. So both equity only put call ratios remain on sell signals. They're in oversold territory, as I said, but that doesn't mean anything until they roll over and begin to trend downwards. Then that would be a buy signal. Breadth is very negative. We had positive breadth finally on Friday. It's one of the few days in January where we had positive breadth. It was a pretty bad month in terms of breadth. So the breadth oscillators are very oversold because of that, and it's going to take, I'd say, probably at least 3 days of positive breadth to dig them out of this condition and roll them over to buy signal. So that's not exactly imminent. This morning, overnight, the futures are down, so we're probably going to open with negative breadth this morning. New highs versus new lows. We have a tremendous number of new lows still, even after rallying. Sometimes when you hit the lows and then kind of bounce around there for a while, the number of stocks making new lows diminishes, but that really hasn't happened yet. So that's a very oversold indicator, but it's also quite a ways from a buy signal. This brings us to volatility. So if we're looking at VIX, for example, as a indicator, we had a VIX spike peak buy signal in, I think it was Monday, and so that's still in effect right now. The more complex situation, though, is that VIX is trending higher, and that it's above its 200-day moving average, and so is the 20-day moving average of VIX. So as long as those things are trending upwards, that's a problem for the market in the broad sense. Also, the construct of volatility derivatives, meaning the structure of the term structure of the VIX futures, and things like that are still registering negative as well. So the term structure is slightly negative, and the futures are trading at a discount, which is basically that's what's creating the negative status there. We are in a positive seasonal period here for a few days. I began last Thursday with the close. Prior to that, there had been a negative. Now we've switched to a positive. Typically, this is because month-end money is being put to work by fund managers at the end of January. So this will last as a positive seasonal through, Wednesday, maybe Thursday, something like that. So overall, we are beginning to see a couple of new buy signals. I think we have the VIX spike peak, and now we're looking at potentially a McMillan volatility band buy signal and we have the more improving situation going on with the seasonal. So that's not enough to say we're bullish. Certainly not enough. And so we'll wait to see how the other indicators play out. Sometimes these oversold rallies can be so strong they'll drag everything else with it, and then the bears have to kind of start over again. On the other hand, if they cannot generate buy signals from here, then the next leg is going to be lower than 4,200. We'll probably be looking at 4,000 on the next leg down. So in any case, we'll keep on top of all of this in our weekly newsletters, and I encourage you to visit our website and take a look at those. Meanwhile, good luck and good trading.